How healthy are the banks today, and how are you guys looking at them from a portfolio perspective going forward?
I think the banks it's probably a more dynamic market today than what we've seen in a really long time. And there's a big, I would say, differentiation here between regional banks and between the money center banks. So last year, the regional banks got hit really hard because many of them either had really, I would say, suspect asset portfolios because they had a lot of commercial real estate, or they had gotten over their skis with deposit pricing and they had invested in a lot of longer dated securities that all of a sudden were underwater, and it created a liquidity crisis at many of the regional banks. The money center banks didn't have this issue. They actually benefited from the regional bank issue. But then towards the end of the year, regulators came out with extremely strict capital targets and regulations for the money center banks that kind of created a dark cloud over the story for the JP Morgans, the Morgan Stanleys, and the cities of the world. That regulatory picture seems to be easing. There were reports that that money center banks in the U.S. would have to hold 2 to 3 times as much capital as European banks in similar business lines, and that just didn't make any sense. The banks have been lobbying aggressively to reduce these capital requirements, and it seems like they're starting to get some traction. So banks are pretty cheap from a historical perspective. We think the money center banks in particular could be an interesting opportunity if these regulatory capital requirements get rolled back a little bit. We'd be a little leery of the regional banks as there's still a huge commercial real estate component to their asset portfolios, and it's not clear to us that we're receiving the all clear sign on commercial real estate right now.